Hey everybody, welcome back to another edition of Market Talks with Dr. Stocks. This is Dr. Tom Carr, aka Dr. Stocks, coming to you this time from the live trading room here in Southwest Florida, joined with a whole bunch of really great traders of all different skill levels, from first-time beginners to professional traders. I don't know if we have any of those, besides myself, I don't know if we have anyone in the room who trades for a living full time, but with certainly a lot of folks who have very good trading experience, good eye for the markets, good eye for charts. And if you want to join us, go over to drstoxx.com. It's drstoxx.com and click on the subscribe button. Scroll down to the live trading room. You can add that on. And if you want to join the live options room, which we just launched about 4 months ago, you can add that on too as a discount. DrStoxx.com has been in business since October 2002. We publish market letters daily and weekly. We have trading system manuals if you're interested in trading for yourself, learning how to trade. And we have several webinars that will get you up and running with your trading skills. Okay, so let's take a look, first of all, what's going on in the market today. We go to finviz.com. We have the 10-minute charts of the 4 major indexes, and you can see it is a trend down day after a gap higher, and it's been up, 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 up for almost 2 weeks straight. We had like a 9-day win rate, 9 days in a row that the S&P 500 was up over the previous day, and a little bit of a pullback and then more upside yesterday, and then it gapped up this morning, and I think that might be about it for the short term. Now, I was just about to tell the room that when the tariff volatility started happening, we were able to make money on the way down by shorting and adding on some inverse hedge funds, or ETFs rather. But then when it kind of got squirrely there, went way up and then it came way back down and then back up again, it was difficult to do swing trading with our normal market approach. What I did, after a week of not such good returns and getting stopped out both on the long side and on the short side, I decided to take a very different approach, which is what I usually do when markets get a little difficult to trade. And that is, instead of focusing on the daily chart with a look back to the weekly to see what the long-term trend is, we're instead focusing on the hour and 2-hour charts. We look at the hourly chart to determine what's going on in the near term, and we use the daily chart to look at the longer term trend. So that has helped us very well because we had a flat week last week. We had a very good, very profitable week this week. And so we'll stick with that market approach. We'll talk a little bit more about that when we get to the charts. So trend down day, we had some jobs data yesterday. Let's take a look at that. Initial claims came in better than expected. That gave a nice boost to the market, kept a bid under all day, and allowed us to gap up. And we're also getting some tariff headlines, right? We have the UK deal on the table. That's supposed to be the model for all the other deals that Trump is trying to make. 28 countries are lining up, as at least we were told that they're lining up to sign, to ink the deal. And there's been some positive movement toward a deal with China. China's the big one, right? That is the big feast, right? If we can get a China deal that is not horrible, that is really high tariffs, right? He was at, what was it, 145, 145%. He came down to 80% this morning. Hey, it's a step in the right direction. Still very high. Still anything can happen. But I tell you what, if we get some further scale back on tariffs over the weekend, and if we get some hint that China is willing to negotiate and come back, I think we will have a face ripper rally on Monday. But I tell you what, the way things are going today, I don't think that's going to happen on Monday. I think we'll probably get something more like Tuesday, Wednesday, Thursday next week. So right now, pull back. Let's take a look at the charts, shall we? Let's take a look at the charts. So this is the S&P 500, the micro E-mini futures contract for the S&P 500, and you can see here's the tariff crash, right? A little bit of a hope here because of the 90-day. No, this is the 90-day pause, and this is where trading got really difficult. Right in here, it was down one. It was huge up. everybody had to cover their shorts. Bulls started piling in, and then the very next day slammed down, and the next day was down a little bit. And then it popped back up, and then it was back down again, and then popped back up. So it was 1 or 2 days up, 1 or 2 days down, and that makes for difficult swing trading. We had a little bit of that this week, right? So this week, this is all 5 days of the trading. It started week, 2 down days, and then 3 days up, including today. Now, I don't think today's going to end in the green, although a flat day would probably be expected. And we're set up here to ease back a little bit. I don't think we're going to get a major pullback. I don't think we're going to get anything like a return to the downtrend. There's just still too much hope out there. But you know what? Over the weekend, you're probably going to get a lot of news programs focusing on things like empty shelves, uh, super expensive Chinese goods coming in because the 145% tariffs have been applied to goods that are now coming into the United States. So you're going to see your cheap goods in Walmart really start to double in price or more. And there probably is going to be some shortage of things. So we're already seeing that in California. We haven't seen that out here in Florida just yet. All the shelves are still well stocked, but it will probably come in unless things really start to shift. So the market hasn't priced all that in just yet. And of course, a lot of negativity out there, and that is likely to bubble over into a little bit more of some volatility that we haven't seen. The volatility, just take a look at the VIX, has been coming down, right? Way up near 60, all the way back down to 22. Now, anything over 20 is still a modestly volatile market. Anything above 30 is a very volatile market. So between 20 and 30, you've got, not the easiest market to trade, but very good market to trade if you start to scroll down from your daily chart down into the 2 hour to the 1 hour, even to the 15-minute chart for some short-term swing trades. That's where the money is when things are a little more volatile, right? I don't think we're going to get below 20. I would be very surprised if we did. I think we'll probably get back up into the mid upper 20s by this time next week. I could be wrong, and I hope I am. And of course, the market has a mind of its own, and it's always 2 steps ahead of us, right? 2 steps ahead of what we're seeing in the everyday headlines because it's already pricing in what's supposed to happen next month, 2 months from now, 3 months from now. It is a forward discounting mechanism. Everything that we now know about tariffs and about the economy and everything else has already been priced in. So, okay, let's take a look. Let's go back to the S&P 500. We didn't quite get up to the 200 period moving average, did we, with the SPY? No, we did not. And everything is downtrending, right? We've got the 50 period below the 200. We've got the 21 just below the 50. And the 200 has gone flat. The 50 is falling. And the hopeful sign here is the 21 EMA, which is rising. Not only rising, it's just about to cross the 50. That's a bullish crossover. You've got the bullish cross of the MACD over the 0 line. That shows we're now in at least a short-term uptrend. But per the 100-day look-back period, which is about 3 months of trading, the LRC, those are the bands in the back there, showing a consistent downtrending market. A couple of very positive notes. One, very good bullish accumulation here. See all these green bars and quite a few tall green bars. That's bullish accumulation. Those are accumulation days. That means that the market is being bought. This is not just short covering. This is institutions plowing into the S&P 500. Of course, this is the micro E-mini. You're not going to see too many institutions trading this one. They tend to trade the big SPX, or they buy calls on SPY, or they buy shares of your MAG stocks, right? They're not necessarily buying the micro E-mini, but this reflects what's going on in the broader index range. So a little bit of consolidation. Well, let's just call it a little bit of a bull flag. You need 5 bars for a bull flag. That's exactly what we've got. We would expect then a breakout to the upside, but that would be normal in an uptrending market. We're not in an uptrending market. We're in a downtrending market. We have to remember that. That's the a little question mark at the back of our minds about all the bullishness that we've seen in the past couple of weeks. It's all good. We want to see bullishness, and eventually the market will return to its long term trend, which is up. And we just have to get past all the tariff uncertainty, and that's pretty much still where we are. Now, the good news, labor market not showing any signs of weakness. ISM numbers, yes, showing recession. GDP numbers, yeah, not very good. Durable goods orders and consumer sentiment, not bad, not bad at all. And retail sales came in pretty cool, as I recall last. But inflation has been also cool. So it's like a, it's a, we're expecting inflation to go way up on the tariffs, but up till now, without the implication or without the imposition of tariffs on most consumer products, you're seeing a pretty good, consistent. We had a little bit of an uptick in CPI, I have to say, just a little bit of an uptick, but it wasn't bad enough really to knock the market off track. So, mixed picture at best. Now, here's one other hopeful sign, right? The volume is looking good, and I think what's happening here, this is my path of least resistance, which doesn't have a perfect track record. Let's put it that way. But the path of least resistance here on this bottoming pattern, which I think is what we have, is left shoulder, big head, all the way up to the neckline again, which is where we are yesterday. And now we'll fill in with a shallow, short, tight, a right shoulder. I think that's probably what we're going to see over the next couple of days or next couple of weeks, even. May in most of the minds of the guys in my pro trading group, and all of us are trading full time. Some of us are managing money, and I just manage my own. Are pretty much thinking that May is going to show some weakness somewhere along the line. I personally thought it was going to start last week. It didn't. Then I thought it was going to start this week. It didn't. We had 2 days of downside, but that was it. So, likely the last couple of weeks of May might be a little bit rougher, but we'll see. And then we get into June, July, August. These are pretty good months seasonally. And then, of course, we get the September swoon, typically happens, and then a strong quarter to the end. So we've got some good stuff ahead, but I think we need to work out still a little bit of this uncertainty. Also, the Fed is not really on our side just yet. They probably will be June or July, but they're not there yet. They want to see some weakness in the labor market, and that's, I think actually Powell's doing okay. But the market would like to see them start to at least tick off 25 basis points each time they meet, and it's just not ready to do that. Okay, so path of least resistance is a building out of this right shoulder underneath the neckline. I don't think we're going to break that neckline, and not likely at all to break the 200 anytime real soon. But it is coming, and I think we'll be up above the 200 by the time we get out to the end of the month. That's my path of least resistance. Let's take a look at the NASDAQ, which is very similar. Here's your left shoulder. Here's your big head. We're up against the 200 this time. We are up in the blue zone of the downtrending LRC, and that is typically like right here, where you can see at least some sideways consolidation, but more likely you see some downside pressure, right? It's just that you've got your 2.0 standard deviations away from the midline of the trend, and the market doesn't like to be too far away from the midline. It really doesn't. The midline is right here. You can see it acts as support when price is below. I'm sorry, back up. It acts as resistance when price is below and support when price is above, and it tends to cluster there, right? Here's a little bit of resistance. Here's a little bit of resistance. Here's not much resistance at all. Pierced right through. That's a good sign, right? If you can break through the mean of a trend and get pretty well away from that mean, you're more likely to pull the mean up than you are to reverse back down to the downside. So again, left shoulder, head, and then I think we'll see over the next couple of weeks a little bit of some back and fill, right? Couple of days up, couple of days down. Maybe a little more on the downside than upside, but we just don't know. We really just don't know. And we could get a Chinese deal tomorrow right? Which would probably send the futures up about 3 or 4%, and then it's all behind us, but we're not there yet. So the small caps, I think, are probably the ones that will show the weakness early first. And we are up into the, let's get rid of these arrows here. We are up into the blue zone. Here's the 2 days of weakness. Big up day yesterday. Pretty good volume as well. But the fact that we're now red and leading the way lower for the NASDAQ, for the small caps, the Russell 2000 is not usually a good sign. It just means that risk is starting to come off. We saw yields pretty strong green, big green yesterday, starting to roll over again today in the blue zone. I do think bonds are probably a pretty good place to be for the next week or two. Gold has been pulling back, but it is back up nicely today. We're long gold in both the live trading room and the live options room. And we're long the miners, I should say, in the live options room. And we just bought it this morning, and it's doing a nice little reversal here off the 21 period moving average. Now, this is what a good uptrend will look like. The LRC is nice and tight, and it's rising consistently. 21 is up and rising, 50 is up and rising, 200 is up and rising, 21 above the 50, 50 above the 200, bullishly stacked MAs, and every little pullback in this uptrend is getting bought. So we had a new all-time high for gold back in April, pulled back into the 21, the pink zone of the uprising LRC, back up into the blue zone where, again, things tend to cool off a little bit. 2 days of downside. It flushed out a lot of weak hands this morning, or overnight, I guess, tagged the 21 period moving average, and it's just all upside from here. And I do think that on this move, we will start to see the LRC probably start to tilt a little bit more bullishly, and we'll kind of ride this blue zone up, and maybe we hit 3,600, 3,700. Not sure that this leg is that, but it should be. We should be able to ride this pretty well. Okay, now here's the thing I wanted to say. That's just all I want to do with the charts. I want to talk a little bit about drilling down into the hourly chart. Let's do that with the S&P. And we can talk about how, let me get rid of all this stuff. We can talk about how on the hourly chart, we can look for those clues, those early clues. Now, we were long the MES as an unofficial trade in the live trading room. We took profits on that. We had calls on the diamonds, DIA, the Dow Jones Industrial Average ETF. We took profits on those in the live options room this morning. I wanted to get out of some of those short-term index trades because this is what I was seeing, right? We had a big slam, and I don't know if this was overnight or during the market. I think this was during the market. Shot way up on a Trump tweet of some kind, and then shot way back down on another Trump tweet of some kind. And then we have this little weak rally. This must have been overnight data, but the weak rally overnight into this morning's session, a lower high, and then the market started trailing off. And if we zoom in, you're going to see that there is a significant supporting trend line. You're only going to see this on the hourly chart, but this supporting trend line kept hitting higher lows, higher lows, higher lows. That's all good, all very good. We want to see that continue. But then we had a lower high right here. That happened last night and off the bell this morning, and then a big crash down on heavy volume that broke the supporting trend line. So that's when we knew, yeah, okay, time to take profits, time to move on the short-term trades. Now, we're not talking, we still have some long-term trades on in both rooms, not really wanting to mess with those just yet. But for these short-term index trades, which we often use to hedge against a market pullback, which I think is where we're at, we want to drill down to the hourly chart or the 2-hour chart and look for these kinds of things, right? You look for your supporting trend line, look for your resistance trend line to the top. So if that does break out to the upside, we'll have to flip right around and look more at the long side again, but I don't think that's going to happen. We tagged the 50 period moving average. We had an hour of some modest upside. Wasn't too bad. Kind of thought, oh, maybe I made a mistake. But then we tagged the 21 period moving average, the midline of the LRC, and we're right back down again. And that's just kind of where the market is right now. It's starting to get a little bit weaker. I don't think, again, I really don't think we're going to get a major, meaningful pullback uh, until maybe next week. And even then, it's still a big maybe. But just a little bit of back and fill, a little bit of consolidation, a little bit of discounting of what could potentially happen to the economy if the tariffs don't change anytime soon. So, what would be the target on this? Now, if we're looking at putting some stops, let's talk a little bit about that. Where do you put your stop losses? I have a whole course that uses the stock chart, and we're using trend lines and moving averages for the most part um, to determine where the best place is to put your stop loss. Now, you can do it in a very mechanical way. So, if like let's say you always put $5,000 into every trade, and the maximum loss you ever want to take on any one trade, pending overnight stuff, which you can't always help, is maybe 5%, right? Okay, so that would be 250 bucks. And so, however many shares you have, you would figure out where would I put my stop loss that would give me a maximum loss of $250. You could just subtract 5% from your entry price, and you'd get the same thing. That's a very mechanical way of doing it. I don't have any problem with people that do that. It's a good. Hold on a second. It is a good idea to uh, know what your max loss is and stay within that. Right, stay within your trading. What do I call it? The risk tolerance. Stay within your risk tolerance, and you can continue trading for a long time. That's what we want. Right? We want to keep your losses small. There's nothing worse for destroying your trading career than taking a bunch of big losses, right? So keep those losses small. And you know what? If you're down to 50%, 45%, 55% win rate, but you've got small losses and this is my weakness, allow your winners to rise, right? Let them give them room to move around both a little bit up and a little bit down. You'll do fine. You will do very well. Bigger winners than losers, and it doesn't really matter if you've got anything more than a 50% win rate with that going on. Okay, so tip here is when things get tough on the daily chart and your swing trades keep getting knocked out on the stop, both long and short, drill down to the hourly chart. Look for some rationality there, and of course your time frame for holding your trades is going to be a lot shorter. It's going to be just a day or two or three instead of a week or two or three. But that's what we do, right? We're traders. We have to keep our time frame to match what the market is giving us. You can only trade the market you have, not the market you want. Now, if you're not going to do the percentage stop loss, which is fine, another tip that you can use is you go over to something like FinViz, you type in, let's just put in SPY, and you go drill down and you look for the ATR, the 14 period ATR. This is the average true range. So this is what the stock tends to do in terms of dollar value, moving up and down on an average each day over the past 14 days. Right? It takes I'm not exactly sure how this works, but it's like the high and the low, right? That's your range, plus the gap, if there is a gap, between the 2 days, and that is your range for that day, right? What was the highest price um, yesterday and the lowest price today? I think that's how it works. I could be totally wrong, but that's average true range, and it takes into account high and low and the gap, and then it averages that out over 14 days. So right now, SPY is trading at an ATR of 12. That means it is expected on an average day to move 12 handles, $12 up and down from high to low. The spread between the high and the low, including the gap from day to day, is about $12 per day. So you could use that. Now, you don't have to use the full ATR. You could go like half an ATR, two-thirds of an ATR. So if you do the full ATR, you would put, let's say you're long SPY at what's the current price? 565. You would put your stop loss at 553, right? 12 handles away from current price. Okay, that's another way of doing it. That's actually a pretty good way because uh, it takes the actual movement of the price. You're putting a full ATR from your current price all the way down for your stop loss, and of course, the ATR includes the highs of the day or any positive or bearish gaps. So if you're looking at current price and putting it $12 down, you're probably going to be below any of the low dips that every trade is going to have, right? Okay. The other thing you can do, and this would be done probably more on the daily chart than the hourly chart, but you can look at your major moving averages, your 50 period. And if it's anywhere near the 200, I wouldn't use the 200, but let's go to the daily chart and we'll take a look how to do this. So let's say that I bought the S&P down here on this little dip. This was Wednesday, and I bought it at 5609. Now let's do the SPY. I bought it on Wednesday, and let's say I bought it right at the open, 560 or so, 560 and change. Now, it is just above the 50 period moving average, and the 21 is not too far away. I personally, I like to use moving averages as stops. I would put my stop loss just below the 21 period moving average, and then I would trail it higher as the moving average is trailing higher. So if price comes down to meet me, I'm actually reducing my risk each day because I'm moving that average up a little bit, keeping it under the 21, but the 21 is still rising. If the 21 starts to roll over, I probably should be out of the trade. If price breaks through the 21, it's going to stop me out. I should be out of the trade. So that's another thing that you can do. The third thing you can do is look at the price itself, which is typically what I do. In fact, it's what I always do in the room because I'm looking at the hourly chart for the most part, and I like to look at where are the pivot points, the levels of support. So if you bought on the Wednesday, you could just keep it right below that day's low. You're still in the trade in that case, or you could go back to the most recent pivot low, which would be down here on the 30th of April, and you would put it down below that low. Now, that's a little bit far away from current price, but it would probably keep you in the trade for quite some time. And then you'd have to leave it there for a while until a new pivot low appears, which would be probably this one right here. And then you would put it underneath that pivot low and so on and so on and so on, right? Okay. Let's see. That's really about all I wanted to do today. Where are we at in time? 12:15. Let's take a look. I'll tell you what. Let's go down to the hourly chart for the other for the ETFs, right? And we'll see what's going on here. So it's a little bit different when you're looking at the micro E-minis, which what I prefer to do. You're including the overnight trade data. So all the European hours and the Asian hours, they're all baked in to the chart. With the SPY, you're only getting American trades, and you're not including any of that overnight data. So I think you get a little bit more of an accurate picture with the SPY. I'm sorry. You get a little more accurate picture with the MES, the future E-minis contract, but it doesn't hurt to. Usually we trade. Well, I trade the micro E-minis a lot, but most people are trading the ETFs, and so best always to chart what it is you're trading. Now you're going to see here. This is the hourly chart for SPY. That SPY has not yet broken that supporting trend line. It's still above, and it's still above the 21 period moving average, and it's still above the 50. And we have the stacked MAs, and on the SPY basis, it still looks pretty good, right? Still looks pretty bullish. We're still above the pink zone of the LRC. The LRC is nicely rising. But when you go back to the MES, you're going to see it is below the 50. It's below the 21. It's below the midline of the LRC, and it's below the supporting trend line. So I personally think this is a better picture because it does include a global market rather than just the S&P, and the stock market today is a global phenomenon. Let's take a look at the NASDAQ for the same reason. So here is your supporting trend line break, and you can see it held quite nicely to that. Big push off, pull back, push off, pull back, push off, and then it broke. We had 1 hour, like the S&P, of some back and fill on that big red slam because the red bar was all the way down here, and then it started to rise back up for an hour. And now we're into another hour of downside pressure. So look, you don't see that very much, right? In the SPY especially. No, you really don't see it yet in the QQQ. So again, I prefer to use the micro E-minis. Let's take a look at the Russell. Always good to keep an eye on what's going on in the Russell. I think that the Russell is going to have some problems soon, but we were long. We were long the TNA for an overnight trade. I think it was maybe 2 days, but it was right here, right? It was that reversal off of a nice upside into the open, and then a reversal after the open that knocked us out of the trade. We took profits, but it was, and I'm glad now because we would probably be a bit underwater if we hadn't taken profits on TNA. But I have to say, compared to the NASDAQ and the S&P, this has the potential of a bit more of a reversal to the upside. So it hasn't closed below the 50. It is below the 21. That's not a good thing. It's below the LRC midline. That's not such a good thing. But we're above the 50 and we're above the trend line. And as long as it stays above those two things, it has the potential to reverse back to the upside. The only thing I don't really like is that we do now have a lower high, right? And I guess we could probably say, at least on the hourly basis, we also have a lower low. So lower highs, lower lows tend to flag the beginning of a new downtrend, and I'm pretty sure that's what we've got now. It may not last very long, and I'm hoping it doesn't, and I'm hoping I'm wrong. But that is your, let's not even call it a downtrend. We'll just call it a pullback off of a quite nice run in the small caps. Got up to the 200 period moving average, the top of the LRC. Now we're just kind of cooling off a little bit, doing some consolidation, some back and fill. How do you trade this? Well, you could do a couple of things. I don't think I would be buying it right here, but you could buy a tag of the supporting trend line with a green candle following. We're not there yet. We're still in a red candle. If it were to reverse and give us a green candle off the 50, that's also a good entry place. I would prefer to see it tag the trend line and then reverse higher and give us a good hour of upside on good volume. So we see that we're not entering a trade that nobody else is getting into. And that could give us a short-term buy signal. Otherwise, I think it's probably going to do this, maybe a week up, and then another leg down, and then maybe, where are we at then? The 13th, 14th of next week might be a time to get long TNA again for at least a short-term trade. Now, my focus this week, started to do this last week, focus has been on this hourly and 2-hour charts. So our trades are short. We're in and out, not always day trades, but usually 1 or 2 or 3 days in the trade. And I plan on just continuing to do that until we get better clarity on tariffs. All right, guys, I'm going to have to let you go. Actually, MSTR, I'm curious about MSTR. So thank you for that. Let's go back to the daily charts. I don't really want to do chart requests because I'm on a bit of a time crunch. Have a client meeting at 1 o'clock. I need to prepare a little bit for that. Let's get rid of some of this stuff. Let's take a look at Bitcoin first because MSTR strategy, as it's called now, is an asset play. It's a play on Bitcoin. I would prefer just to play Bitcoin. But there are some times when MSTR is up and Bitcoin is not doing all that well, and vice versa. But I prefer, we're already long Bitcoin. We're long the micro E-mini Bitcoin in the live room. We're long IBIT calls in the options room. So I am bullish. I was bearish. And where was I bearish? Right in here. It was a downtrending LRC. We hit the blue zone. We couldn't hold. We flashed right back down again. that to me was a potential sell signal. It reversed the next day, followed through the next day. Big up day yesterday, and a big gap that's holding up so far today. So uh, Bitcoin looks like a place where you're going to see some safe haven money go. And Trump, the big thing, that the big green stick there was from Trump announcing the strategic reserve, which he's been talking about for months, even before he was uh, 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 before he became president, talking about a strategic reserve for crypto, Bitcoin. You've got Robinhood, and Coin coming out and adding to their Bitcoin lines, so that's all, or their crypto lines. That's also good. And yeah, I think there's a good, healthy demand for cryptocurrency in general, for Bitcoin in particular, and I like the move. So your all-time highs are up here. I think we're going to hit them. The all-time intraday high is up around 110. We need to see a close up above 107.5, and then we get the blue sky breakout, and then who knows where it's going to go. 140 by the end of the year, maybe. Bitcoin has that tendency, to do nothing, to do nothing or worse for months on end, and then boom, it's up 200% in 3 months, or 40% in 2 weeks. So it's just one of those things. I think you're better off just buying it, holding it, putting it in your long-term account, not looking at it every day. But at the same time, it can be a lot of fun to trade, and we do a lot of trades in MBT and IBT and ARKB and so on. And we have Bitcoin in our long-term wealth building portfolio in the live trading room as well, and no plans to sell that anytime soon. That's been one of our best trades. Okay, back to MicroStrategy. Is it a short? Well, let's see. Okay, I can see why you would think that. And I wouldn't kick anybody in the pants for shorting it a little bit, but keep in mind that you're also shorting Bitcoin, and I don't think Bitcoin is going to slow down until it gets up to some new all-time highs. Oh, it might have a day or two where it consolidates, but I don't think it's going to be rolling over and selling off. But I can see why you would be thinking this, right? It's even above the LRC, which is above 2.0 standard deviation. That doesn't happen very often. We are very far away from the midline, right? So a mean reversion trade can certainly happen. We're pretty far away from the 21, very far away from the 50. And as you can see, right, here's your 21 period moving average. When it gets very far away from the moving average, it does like to pull right back down. Very far away, pulls back down. Gets away again, pulls back down. So that's the tendency. That's why their moving averages are averages and why there is such a thing as a mean reversion trade. So I could see it kind of setting up here. This is a bearish bar. Yeah, I don't know. Maybe there's something going on in the company that market doesn't like that isn't Bitcoin related. Don't know. But yeah, I can see that. I'm not going to short it myself because I see it as a short on Bitcoin, and I don't think Bitcoin is going to do much to the downside. But just taking this as a trade in and of itself, and I'll tell you what, where it would really get moving fast is that trend line. Let's take a look at the hourly chart, see if we can see what's going on underneath the surface. Okay, so here's your upside breakout yesterday, and here's the red bar that we're seeing today. It is a flush out, right? Getting all the shorts to cover, right? A little bit of a squeeze there. And then they'll get really frustrated today because they probably got stopped out early this morning, and now they're seeing it fall back down again. Still a bullish setup here, however. Uptrending LRC, stacked MAs, we're still above the 21. This could be just a very simple little pullback. That volume is telling, however, so that's not so good. I would say buy it when it gets down into the pink zone of the uptrending LRC. That, to me, that trend line as well, would be a very nice place to go long, if and only if you see a green bar and good volume. All right. Yeah, fundamentals. Well, you don't buy MSTR for the fundamentals because they don't even have a product anymore. They're just focusing on diluting their shares. They don't care about EPS. That's not even a consideration. Diluting their shares, buying more Bitcoin, Coin, I think, is still a reasonable trade because it's expanding, right? They just did a buyout of something in the crypto line, and there is increasing interest in trading crypto and Bitcoin in particular. So I do see coin as a viable play. I'm not so sure I would even think about Mara or Riot. Do people even mine Bitcoin anymore? I don't know. I'm not really in that world. I just trade the stocks, so I don't see Mara or Riot or what was the other one, Hut, as being viable trades. But coin, I think, is probably the long-lasting one that will be around for a while. And now Hood is stepping on their territory by doing pretty much the same thing. So some competition is always a good thing. All right, guys, I'm going to go. God bless everybody. I will wrap this up, produce the video, get a link to you in the room, and then I'll have to get off and go to my client meeting. God bless everybody. Have a great weekend, and we will see you back in the room at some point soon. Bye for now.